The TTF and NBP bulls are patiently waiting for the next bullish headline to finally push the price higher. We are now approaching some super interesting buying levels on those key markets. The German power markets and the EUAs, however, are still caught in their respective ranges and they are ready to move lower. Hello, everyone. My name is Marcello Kolax. I'm the managing director at Clever Markets, and today I'm going to walk you through the European energy charts for the week starting 16th of March 2026. If you're attending the X Energy Exchanges conference in Athens or the Flame conference in Amsterdam this May, then make sure that when you buy your tickets, sign up to the Clever Markets masterclass that I'll be hosting at both events. So on the respective checkout pages, you will be able to add on the Clever Markets masterclass. First things first, everything you see here, of course, is just my personal opinion and not an invitation to trading, and it is also not trading advice. So this is the TTF sentiment benchmark as voted by all of you. Every Monday morning, we release the industry's only reference point for the TTF sentiment. We've been doing this for 3 years, so we have the longest running back history there as well. And here we can see that week on week, the sentiment has remained nearly unchanged. The Bulls are still dominating with around 60% of the votes, and the Bears are represented with around 20% of the votes. So overall, the setup is still rather bullish. And that is also reflected on the TTF itself. Yes, last week saw a little bit of hesitation. We went up and down. It was very gappy, and there were not a lot of trading opportunities. But zooming out, in the grand scheme of things, the market is still positioned to move higher eventually. And that is both reflected in the charts, in our proprietary in-house algorithms, as well as the TTF sentiment benchmark. So right now, everything is still aligned for a little bit more upside overall. So let's get started with the TTF front month. So of course, as always, first I want to look at the daily chart. So here I just zoom out a little bit to get our bearings. And here we see that after the initial rise, we had a gap and then we had a very gappy market all of last week. For now, we do expect the market to continue a little bit more sideways, just above the 61.8% FIB retracement that we have drawn on here with these FIB retracements. So we put the 0 up here and the 100 down there. If you wish, you could have also put the 0 down here, which is only a marginal difference, doesn't really matter all that much. So either the 18th of February or what did we say, the 26th of February. So the difference is marginal. The only question is, do you want the 61.8% FIB retracement to be a little bit lower or a little bit higher? So we are kind of happy with this because it does align with the low from the 10th of March and what we kind of had on the 11th of March. Now, usually we see that the market tends to correct towards the 61.8% FIB retracement before buying continues. And a lot of the market seems to have looked at the exact same level as we have because the bears have not yet pushed below that. So overall, that is an okay sign that the bulls are likely to eventually continue. Now, the next question is, how strong is the bull trend right now? Well, as we can see, not so strong. It is still there. Yes, the remnants are still there. We are still forming like overall like higher highs and higher lows, and there hasn't been any evidence that the market will push lower anytime soon. But of course, we did see that the bullish momentum has now topped out. Of course, because the market has started to move sideways. We are also seeing that the stochastic topped out whilst still in neutral territory. So this overall also shows bullish exhaustion. Now, let's have a look at something a little bit more sophisticated. Let's move away from the classic technique analysis tools. Now, here I'm on the Clever Markets dashboard. So for all our clients, we'll go on the daily chart. We'll look at regime index to simply see how strongly the market currently is trending. Now, here we see that on the 13th of March, so just last week, this is the latest data that we are working with for this Monday. The market is dark red. So dark red simply means that the market is strongly trending. So our regime is in a strongly trending market. Our next question is, okay, so is it trending higher or is it trending lower? For that, we go onto the trend indicator, which is our other proprietary indicator, extremely robust, back tested over decades and super reliable. So this indicator is showing us in comparison to a 3-year look back period that is always updated on a rolling basis, how we are comparing right now in terms of trend strength. So right now, out of 20, we are at a state called +5. So you can see it goes from +20 to -20, from extremely bullish to extremely bearish. And each energy market has its own characteristics. So here, for example, this is for the TTF front month, and we can see that bull trends usually only go until +15, whereas bear trends tend to go until -17. So just by looking at this without having to understand what all of this means is we can already see that the bull trends are usually not as long and confident as the bear trends. Super interesting, right? So what did we say? Right now we are at 5. So we still have like quite a bit to go before we reach the trending market upper boundary. And here we can see, so this text here is not freshly written. This is what the back tests have shown us. So this text doesn't change essentially. So here we're seeing between +4 and -8, so right now we're at +5, traders are advised to be cautious and reduce outsized exposure due to high uncertainty. Well, we can tell this without even looking at the candlesticks, because remember, the candlesticks there's a lot of uncertainty. We are within this tight range, and our tools have independently identified this as well. So the next thing we want to know is, so are we more likely to move higher or lower? So for that, we look at our box plot that is showing us the forward 8-day returns over the past 3 years. So right now, us being at 5, we can see that we are near the zero line. So above the zero line, we would expect positive returns within the next 8 sessions. And below the zero line, we would expect negative returns within the next 8 sessions. So you can see we are at 5. So we would marginally, maybe a little bit, expect some more negative returns, but it is not very, very strong, right? It's not nearly as strong, this conviction, as we have it like here, for example, right? So you can see we are closer to the zero line. So it is a little bit iffy. It's a very tricky situation right now. So what do? We work with clear trigger and invalidation levels. So we are saying that if we get a daily close above 55.75, which is above this gap, then the bulls could continue higher towards at least probably, let's 69.5. If, however, we do get a daily close below the 61.8% FIB retracement, which seems a little bit less likely looking at the classic technique analysis tools, then we would be most likely pushing towards the 37.696 or even below that to fill this gap here near 33.77. Now let's have a look at the TTF front month hourly chart to get an even better idea. So here we are working with this even tighter range, right? So this was a little bit more difficult to establish, but we could say right now we are in no man's land between 45.55 and 55.75, which is this gap resistance here. And within that range, there is not a lot of trading opportunities. Even on the 15-minute chart, there wouldn't be a lot to be had here. So be careful this Monday morning. Within this range, there isn't all that many trading opportunities, although the range is like a 10 euro range. It's crazy, right? If you really, really want to trade this, maybe have a look at the 15-minute chart, but please wait for the market to open in case you are getting some big gap higher or lower. So we would say that the bulls would be more in charge above 55.75, and then we could make it towards the 65.79 or the 69.5 beyond that, or the 69.5 beyond that, as seen on the daily chart, right? So the bulls would grow slowly in confidence. The bears on the hourly chart, however, would be confirmed below 45.55, which 45.44 kind of coincides with the 61.8% FIB retracement on the daily chart, which is this range support on the hourly chart. So that means many traders with many different trading strategies are all looking at the same level, so the bears would probably be confirmed below that level. And that is all for the TTF front month. Now let's have a look at the German power front year. Here, once again, we get started with our dashboard. So we click to German power front year, we go to daily, we look at the regime index. First, we want to identify, are we in a trending market or are we in a sideways market? Because if we are in a trending market, we probably want to use a trend following strategy, we'll probably use a combination of oscillators and trend following tools like momentum and trend tools. And if we are in a sideways range, then we would want to move into a lower level time frame, maybe the hourly chart, and start trading only with oscillators. And we want to kind of ignore trend and momentum tools. So which one is it? So here we can see that we are still in a dark red. So that means the market is trending. So once again, here we look at our standard text. When used in conjunction with a trend indicator, it suggests a higher likelihood of strong trend formation. All right, so let's use it in conjunction with a trend indicator to see where we currently are. So let's have a look here. I'm just zooming in. So we can see that the bull trend has come off from the 9th of March, where we reached a state plus 10. We have since come off plus state 6, state 6, state 6, state 5. So the trend strength has come off once and hasn't really changed since then. So let's have a look at what this usually means for the regime index. You can see we had a plus 6, so we are kind of like in the middle of a weak bull trend, exactly the same as on the TTF. So let's have a look at the text that defines or like that helps us with this market character. And once again, we are very confident we only revise this once a year. So we say that during trending regimes, moderate bull trends have a high tendency to revert from plus 8 onwards. So we are at plus 6. So there's still a good chance to move towards plus 8. And anything beyond that, there's a good chance that we'll start reverting or the chances of the reversal increase. So here, let's have a look at this, right? So we are well below the green line. So there is a chance that we actually start reverting lower fairly soon. And this is also reflected as shown in the box plot data, where we are plotting the average 8-day forward returns depending on what market state we are in. So we are getting ready to move lower. Let's have a look at the chart. So you can see, even without looking at the chart, we know that the market is strongly trending. We are getting ready to move lower. And all of that is reflected on the chart itself. So here we are on the daily chart. We can see that we have reached this ascending channel resistance. And even back then, we realized that, yeah, probably we are very likely to continue lower, which is exactly what happened. And here you can see we expect the market to continue lower at the start of this week, maybe towards the 61.8% FIB retracement at 88.11. That doesn't seem too crazy. And usually that's where buying sets in at the 61.8% FIB retracement, and then the bulls could give it another chance. We don't really think that we will go massively past this, so be careful of maybe an extended sideways range forming on the daily chart near the ascending channel resistance. But once again, this isn't all that clear yet. Only if we make it below the 61.8% FIB retracement at 88.11, then the bears are in charge and we probably make it towards 82.18. So this is super tricky, but let's have a look at the hourly chart to get a better idea of what's happening right now. So you can see we are working with a descending triangle, and descending triangles, by their nature, are typically resolved to the downside eventually because they're showing us that the market is willing to sell at lower and lower prices, whereas the support remains the same. So that's why this pattern is usually resolved to the downside. The next question is, okay, so we can generate targets from those patterns, but how? What we like to do is we like to take the widest bit of this triangle and we just apply this to the breakout direction. So that gives us a target at 80.25. It's really just we measure this and we copy this distance towards here. So if we push below 90.7 now, we activate a target at 80.25. That's a €10 difference. But isn't that great that we can start working with targets and this is a good setup? So here's the thing, technical analysis is not predicting the markets. So maybe this whole thing doesn't even play out. That's also fine because if we never get an hourly close or two consecutive hourly closes below 90.7, then this whole thing will just never be activated. But for now, we are working with it. So which is pretty neat, right? Of course, on the way lower, do keep an eye on these troughs here. So that's why we see like a bounce could happen here early on at 85.15. Now, the next thing is we need to be aware of any false breaks. So this in itself is its own like 30-minute discussion as it's currently done on the Clever Markets Academy. But overall, what I want to see is as we break below this, I want to see two consecutive hourly closes below the descending triangle. I want to see good red candles, not any sort of like bullish reversal candles. I want to see higher volume, and I want to see that the momentum tools and the oscillators have all topped out and are pointing lower. So only then am I more certain that this descending triangle actually has resolved lower. So let's do the opposite. If we start seeing just a half-hearted close below it, and then maybe one of these two closes below the triangle is maybe one of them is like a bullish reversal candle, like a hammer, and it's low volume, then I'm not so sure that the downtrend will be maintained. Then probably was just a false break, and then we are more likely to just swing sideways. For now, it's looking pretty bearish to us, considering that the stochastic on the daily chart has somewhat topped out, and we are expecting negative returns on average looking at the past 3 years. So this weak to moderate bull trend may be coming to an end at some point soon because the bulls have somewhat ran out of steam. Now let's have a look at the EUAs. So of course we have been moving sideways for over a month now. So what are the indicators showing us? So here, once again, we go on the EUAs, daily chart, regime index, and of course, it's no surprise that we are still in gray territory. That means the market is currently not trending. All right, no surprise here. Now let's have a look at the trend tool. So one fun thing I want to show you is that depending on whether we are in a trending market or in a sideways market, the nature of the market changes. Remember the TTF and the German power markets, they were trending, so the shape was more evenly spread out. But here on the EUAs, it looks more like a bell curve. And that is simply because in a sideways market, we see shorter trends that revert quicker to the mean. So the bull trends are shorter and the downtrends are shorter as well as we are swinging within these ranges. And that's exactly reflected here. So the only thing you need to notice here is like this steep drop off from 12 to 13, and maybe here I want to say from -10 to -11, showing us that once we reach those levels, the market is more likely to revert back to the mean. And also you can see here that the box plot is near, everything is near zero. So there is a very high degree of uncertainty within those ranges. So with this knowledge, we look at the chart. And here on the daily chart, we are seeing that, okay, we are still within this rectangle between roughly 68.11 and 74.37. Within this range, there is no trading opportunities to be had on the daily chart. For that, we want to go into the hourly chart to trade the smaller swings. But you can see overall, we are inclined towards eventual bearishness. So let's have a look at what the hourly chart is showing us. So we expect at the start of the session on Monday that we will bounce because we have bounced already. So there is an okay chance for us to move a little bit higher, maybe towards the 72.48. If at any point during this up leg we start seeing bearish reversal candles, or maybe the volume is drying up in this up leg, or we start seeing bearish reversal signals on the stochastic, then we would say, okay, we have topped out and we are more likely to continue lower. And if we no longer hit the upper end of this rectangle, then an eventual break below the rectangle seems most likely. So if we do get a daily close below it or two consecutive daily closes, then the bear trend on the daily chart is more likely to continue. So just because we have a slight preference for eventual bearish continuation doesn't mean we want to have any big opinions right now. We are conscious of eventual downside continuation, but we are still taking into account that we might see a bounce today or at the start of this week, the first half of this week, before continuing lower. And if we find support here once again, then any sort of like bearishness on the daily chart also is never triggered. So that's the good thing about TA. We're trying to not predict the markets. We're just saying, if this, then that. If this, then we are bearish. If that, then we are bullish. And right now, we are no man's land. So be careful out there. So in the last market, of course, we want to look at today is Brent. So here, once again, let's get started with our regime index. So here we can see that Brent is in dark red territory. So we are strongly trending. So this is super important. Now let's have a look at the next bit is like how strongly are we trending? So we are right now at a state 15 and you can see 15 out of 20. Let's have a quick look what this says here. During trending regimes, bear trends rarely stretch beyond -12, while bull trends have a high tendency to revert between +7 and +14. This is the main reason why Brent been such an unprofitable market for trend following strategies in recent years due to short-lived trends. All right, so we are +15, so we are well beyond that. So what does that mean? So you can see here in a state of +15, we have made it out of this territory, and there's a good chance that for now we will continue higher. So this is one of these like freak events where a little bit more bullishness is to be expected. We made it past this dangerous area where the market usually tends to revert, and we are now once again expecting positive returns within the next 8 sessions. And you can see we're expecting up until 5% of positive returns. So let's have a look at the chart here. So this is also shown on the classic tools. The trend and momentum tools are all firmly bullish. Moving averages, MACD, stochastic, all looking bullish here. So the next target for us is the 61.8% FIB extension at 112.88. And if we make it past that, 120 doesn't seem all too crazy anymore. However, we are super careful and we are very conscious of any potential downside reversal. So that's why we are looking at the hourly chart. And here we are dealing with this ascending channel. However, do be careful because you can see that we haven't really reached the upper end of the ascending channel for quite some time. And we could even put in a flat here or maybe like a small trend line, which would turn this whole thing into a rising wedge. And like rising wedges or simply the fact that we are no longer hitting the upper end of the channel are usually an indication for some bearishness. But we are not quite there yet because the momentum is picking up again after having declined. It is picking up again. We are seeing that the stochastic is still bullish, and we just now got a bullish crossover on the 8 and 12 exponential moving averages, which is even a golden cross where both the 8 and the 12 are already pointing higher, and the 8 is moving above the 12. So it means the market was bullish and is now even more bullish than before. So there is a good chance that we'll get out of this hesitation and more gains are likely to come. Considering the high uncertainty with the Strait of Hormuz and the war between the US and Iran, just any bit of news could potentially fuel the uptrend further. All right, everyone, that is all for today. I hope you found this insightful. If you want to see the full free report that we publish every Monday, then do check out our newsletter. There's a link somewhere down below. We were told by our readers that the free stuff that we give out is even better than some of the paid stuff out there. So do consider subscribing. Everyone, have a good start into the week. Stay safe out there and bye bye.